So markets are currently at all-time high, and I want to show you exactly what it is that I'm looking at. So again, please understand that just because I see value in something does not mean that you need to. I've been wrong in the past before. I'm just sharing my thought with you on what I plan to do. Anytime that the market is extremely overbought, this is QQQ, this is a NASDAQ ETF. You can see that we are at all-time highs at $464, literally like at the current price level that we are at right now. So because we are so overbought, one of the things that I love to do is I love to prepare for then markets to correct themselves. Just like when markets are extremely oversold, you prepare for markets to recover, right? Because markets tend to be more bullish than bearish. Markets always pull on back. It doesn't matter how bullish something is, they always pull on back, pull on back, pull on back. I mean, it's not free money, but for me, I love trading these kind of reversals. And I've been wrong in the past before, but the way that I accommodate that is I just manage my position size. So how is and what is a way that you can, a step that you can take to make money while the market, or if the market does begin to pull on back? Well, when the NASDAQ market is extremely overbought like this, there is an ETF that is named SQQQ. So instead of shorting a stock, which means you make money as it sells off, this does the opposite. It's an inverse. It's a triple leverage inverse ETF. So therefore, if the NASDAQ market drops 1%, right? So we just talked about it, QQQ. If this thing drops 1% from its current highs back down to the moving average, that's a 2% drop, right? 2% drop. Okay, remember that, 2%. Okay, well, what is that going to be for SQQQ? Is that going to be a 2% recovery? No, it's 3 times that. It's a 6% recovery. And again, 6% might not seem like a lot because we're in this like whole crypto mentality where all these stocks and cryptos and meme stocks are making 50, 60, 100%. 6% is a lot, in my opinion, right? Especially when you can do it in a more calculated way that it's not extremely risky. Yes, it's a triple leverage ETF, but this one follows the NASDAQ market. So if I think that the market's oversold, I can buy this. I plan to buy about 1,000 shares, which is about $9,000. Again, a very light position. I normally trade with $500,000. So taking a $10,000 position on something like SQQ early on is something that I can easily tolerate. I'm not putting myself overly leveraged, an aggressive position. And that's the thing that I want to remind you is you have to build your level of like tolerance and comfortableness when you choose to take trades. People that are just getting started, just like myself, they often take a position with every penny and every share in their account, right? And in my opinion, that's just not the way to do so, because you put yourself in a very stressful situation where you need it to do well, or then you get very uncomfortable, very emotional, where if you do it with 5% of your trading account, you might be like, well, Ricky, then I'm not really making any money. Who cares, right? You just started trading. The point is not to try to make the most money every single trade. It's to show proof of concept. And I want to remind you that the whole point behind this is, okay, well, if you can properly identify these overbought and oversold levels and make money as these things pull on back, then great. Like, how cool would that be next time you go up at bat, and next time the market's overbought or oversold and you choose to take a trade? Maybe you can do it with a little bit more size. And that's the beautiful thing about trading. It's always not just the make it or break it. If you're really trying to focus on learning, then focus on learning. And sometimes you could really cloud that whole learning process when you're so obsessed about what dollar amount it is that you are invested with. So let's size down, let's stay light. And again, let's not be afraid to take advantage of those opportunities. Not just NASDAQ market is overbought, but I wanted to show you a handful of big tech that are extremely overbought. And this one, again, looking at this on the day chart, Apple is nearly at all-time highs. Currently sits at a $3 trillion market cap, extremely overbought. What's another company that's extremely overbought? Well, what about the notorious NVIDIA, right? NVIDIA is about to go through its stock split. Why can't I find it? Oh, it's right here. NVIDIA finally pulling on back today. NVIDIA screaming overbought. Yeah, it's about to announce its stock split, and it's going to be so laughable that once NVIDIA finally begins to pull on back, people are going to be like, well, what the heck? I thought it was supposed to go up after its stock split. It's been going up because of that announcement of the stock split. Have you ever heard the idea of buy the rumors, sell the news? Once the stock split's already announced, you can't be surprised that, okay, the hype is no longer there. It begins to correct itself. People take profits, and then there's a slight correction. Do I think NVIDIA is going to completely crash? No, but do I think that it's due for a pullback? 100%. I mean, it went from $900 all the way up to $1,200 per share within a very short period of time. Know when to take profits. Learn not to be greedy. And even at overbought levels, let's say that you don't want to sell your entire position, get comfortable with sizing out of a position. For those that are unaware of what that means exactly, is instead of selling all of your position, maybe you just sell a portion of it to prepare that if the market does pull on back, you have enough cash available that you can buy back at those lower levels. The example could be is something like Apple. Let's say that Apple is one of my long-term plays. I don't want to sell all of it. Let's say that I own 100 shares. Maybe I'll sell 25. Maybe I'll sell 50 in preparation that if it does pull on back, great. Now I have that dollar amount available that I can buy back at 170, at 179, wherever it is that it begins to find its support based off of previous patterns. Very, very simple. Again, the less you overcomplicate it, the more that you plan out your trades, the more that you are aware of what you can or cannot do, the more enjoyable it is, right? It's not that you're going to be perfect. You're going to make mistakes all the time, and that's fine, right? Just keep those losses small. A good example is I've had 2 consecutive red days, yesterday and the day before that. But on Monday, I had a green day, and my green day on Monday was $32,000. My red day on Tuesday was $1,900. And then my red day yesterday, which was Wednesday, was $3,000. So I've lost about $5,000 in the past 2 days, but I made $32,000. So as long as you could always win more than what it is that you lose, again, you put yourself in a position to succeed. And remember, I talk about these concepts every single day within my live trading session with my LPP team. And especially if you're a complete beginner and you learn best by watching other people do, I really think that you would enjoy my live sessions. That's the second link in the description down below if you want to sign up today and watch me trade live as soon as tomorrow. I appreciate your time. Hope that earned your thumbs up, and let me know what you think about current market conditions. Do we think that they're at all-time highs and getting ready to pull on back, or do you think that they're going to go higher for longer and you just plan to hold? Let me know down below. Take care, team.